So we will be discussing two things. Number one is the educational side, and the other one will be the technical aspect, where we will be discussing like few of the stocks. And from the educational side, in our last session, which was held on the Zoom link, and in that we discussed about RSI, and we decided that in the next session we are going to discuss the MACD. Though we had a little introduction of the MACD, the moving average, convergence and divergence, so we decided to dig it in more detail in our next session. So we'll have just a very quick recap of our RSI. I just want to know from you guys if you have like practiced this RSI thing during the last week, and if you encountered some other questions, you can just let me know, and we can discuss this first if you have some questions, and if not, then we can move on further with the MACD. RSI, the most important thing was the levels 30,000 and the 30 and the 70. If it goes beyond 70, then you have to be very careful, and that's not a buying time. Actually, some of the stocks which are in the upward direction, upward move, and then if they make if they cross the 70 line, then there is a chance that they might fall down. And below 30 is a good buy actually, but not only based on the technicals, you have to see the fundamental aspects too. It might be below 30 because of some fundamental reason, it is going to bankruptcy or something else. Begin our MACD thing. This MACD is one of the trending indicator. Last time we discussed RSI, which was a momentum indicator, and now we are discussing the MACD, which is a trend indicator, and it's a lagging indicator too. Since it is based on the past data, so we say it a lagging indicator. Okay, so how what it shows is actually the strength, the direction, and the momentum of a stock price. So these three things are depicted by the MACD. It shows the strength of the price, it's a strength of the stock itself, whether it's strong, it's weak, momentum, and the direction. This is going upward direction or it's in the downward trend direction. As I said, it's a trend indicator, so it will tell you the direction, upward or downward. And the components are very important. I will tell you the components. If we can just have a look on the screen. Yep. So the components here, the components of a MACD, we have like three components of MACD. Number one is this blue line, which is called as the MACD line, and the other one is the red line, which is called as a signal line. And then the third component is this bar chart, we call it a histogram. So there are three components of a MACD: red line, blue line, and the histogram. The blue line is also called as a MACD line, and the red line is called as a signal line. So now how it is derived, this is actually, we'll focus on this blue line first. And this blue line, which is called the MACD line, it is actually a difference between the two averages, two moving averages, or say two exponential moving averages. When you say exponential moving averages, the short form is EMA. EMA, we can call it EMA. So it is, we'll be saying, we will be using the word EMA in our discussion. So this blue line is actually a difference between two EMAs of the closing prices plotted over time. When we say two EMAs, means two moving averages of two different points. Let's say a moving average, one point maybe last 12 days, the other point maybe like last 26 days. So the moving averages of these moving averages of like 26-day period and the moving average of 12-day period, the difference between these two moving averages is plotted here on this blue line over time. So if we plot one difference here and move on, then we connect all these points together, we'll get one line, which is called as this MACD line. So MACD line is nothing but actually it's a difference between the moving averages plotted over time. Okay, that's how we drive this line. So the most important thing to consider here is that this is actually a moving average line and not a one period. It's a difference between two periods moving average line plotted over time. And side by side we have this red line, which is called signal line, this red line is actually a moving average of this blue line. Okay, this blue line is itself a difference line, difference between the two moving averages. And then we have this red line. This red line is actually a average of the blue line, or we can say this is an average of the difference itself. So this is also plotted over time along with this blue line. This is for the second component. And this third component is this histogram. Histogram, we call it a bar chart also, and this is actually the zero axis. This, if you can see my cursor here, this x-axis, this is currently at the zero line. So this is zero axis, and the above is positive and the below is the negative number. And the height of this histogram, height of these bars, actually gives you the strength of the shows you the strength of the divergence or the convergence. As the name says, like MACD, moving average, conversion and divergence. The moving averages, I told you that these lines are nothing but the moving averages or the difference of the moving averages, and then this average of the average or average of the difference of the averages. Then we say that this is the third component is convergence and divergence. Okay, this convergence and divergence means how converged these two lines are or how diverged these two lines are. Like we can see here, like these are pretty much diverged. Here there is a divergence, the difference between the two lines. And the convergence, if I can show you the convergence, like this is altogether converged, or there is actually no difference here, and then the slight difference here, and these are like pretty much converged. So the difference between two lines is very less. Here difference is less, but here you can see a huge difference and a good difference here. And here also the latest one is, this is by the way Air Canada chart, so you can see here the good divergence here. So this divergence is also shown in the form of a graph. So this graph, if the heights of these bars are high, so we call it that this is a huge divergence here. And then it's going down to means convergence is decreasing, divergence is decreasing, so it is being converged. So whenever there is a convergence, the momentum is getting weaker. The higher the bar charts, it means there is a huge divergence and the momentum is stronger. If you see the latest thing here, okay, so here if you can see this divergence, is a divergence are higher. So you can, but by the way, this was the negative at the below side. So stock was strongly, momentum was strong, but strong momentum on the lower side. Here, if you can see this side, this we can say that okay, this was a divergence, and the divergence was strong. Well, they were the big divergence. As you can see with these the heights of the bars, which are also showing the same, so mean the momentum is strong, and the momentum here is upward. So upward momentum is strong here. The stock has, you know, shown a huge divergence here. Okay, a good strength here of the upward move. What happened with the future of this stock, we will be discussing in our next session now, next part of this session. So MACD, coming back to MACD, three components and two MACD lines: red line, which is called as a signal line, and the blue line called a MACD line, and then we have the histogram. So these are the three components, and the definition I told you, this is the averages actually. So since this is based on the averages of the past data, so this is actually a lagging indicator. It shows the past trend. It doesn't talk about the future. It shows about the past. Like RSI, that was a leading indicator because it shows you the future. When it moves up 70,000, then you can sell, okay, it might fall down. So it was a leading indicator. Unlike RSI, MACD is a lagging indicator because it makes use of the past data to depict the trend. Okay, now moving forward, how to interpret this. So interpretation is very important. Let's back again here. So we have two important concepts here. Number one is the crossover. If this blue line crosses over the red line from below, or we can say there is a cross up. If there is a cross up, then this is a good point to buy. So here there is a cross up at this point. So you don't need to buy exactly at the crossover. Let this blue line cross a little bit and move upward. If it move upward, I think that is the good time to buy. But sometimes what the people do, they who are like more risk takers, whenever it starts changing its shape. For example, it came here and the next day, let's say the line is still here, it has just shown an upward move, but it has not yet crossed over, it has just changed its shape, and this shape is showing that it will now go up, and eventually it went up till here and then moved. So most of the people will enter from here. Those who are like risk takers, they sometimes enter from here, and then eventually it crossed here, and then most of the guys which is enter from here, which is actually the good point to enter depending upon your risk capacity. And then you can see it has gone further up. If I can relate the price of the stock from the MACD, if it was here, like when it was crossing up at this point of time, then you can see the price here was 15.12. Some guys will enter from here and the price actually went up, but it may happen that it has changed its shape from here and then it had moved further down. It didn't cross even, like you can see here, it changed the shape, it went up, okay, from here, and it stopped here for a while. It might have come down, or you can see here it changed the shape, it touched this, but it never crossed, it fell down. So what happened to the stock at this point of time? What was the level? Yeah, this level, the stock didn't move up, it actually went down. So those guys who are trying to enter the position, whenever the shape is changed, it's not a good idea. Stock might not go up because the line might not cross, it might come back again, as it happened here. So the good point to enter here is whenever it has actually crossed and it is a cross up. On the opposite side, there can be a cross down, it is crossing from above, so you call it cross down, and this is the point where you need to exit the trade as per the MACD. So let's see the stock here. So you can see that from here it is saying to exit, so you can exit from here, and eventually it went down, the stock price went down. So MACD has already indicated to exit the trade from this point in time, and you can exit from here. So you need to be careful, like let it cross down, not only because it has just changed the shape so that you exit it. Maybe it changed the shape, it went down a little bit and then it moved further up. Okay, so just to summarize on the MACD, three components you need to be careful of: the convergence and the divergence. The more the divergence, the better it is, it shows a very strong strength. And how to interpret this: if it is moving up, then it is giving a crossover. After you get a crossover, this is a good point to enter. And on the opposite, if it is crossing down after it has already crossed the red line, the signal line, then at this point you can exit the trade. So this will be your trading strategy based on the MACD. But again, MACD is not the only thing that you will consider while you plan your trade. So it is just one indicator. So one indicator is not sufficient. So MACD coupled with RSI, coupled with the volumes, these are the minimum requirements that you need to consider, along with some other aspects too. And then the candlesticks, which we are going to discuss in our next session. So these are also the important factors to consider. So any questions, guys, so far on the MACD? You want to discuss something over this? Just let me know if you have some question or how you felt on this. It was good, or it added something to your knowledge, or something more you want to discuss upon this. Just comment in the box and we can discuss that thing. Okay, please just tell, I just read your message, please just tell basic of candles, Muzuf Khan. Okay, sure, we will discuss the basics of the candle. Let's wrap up this MACD thing and then we will be discussing the candle things. So could you also please touch candlesticks for the new joiners? Yeah, sure, we will be discussing that too. Okay, so guys, any comments so far, or anything you want to say on this MACD before we move forward? So yeah, Musafan is saying what kind of average we need to consider in this. This is actually a moving average, and that is done by the system itself, by the built-in indicator software. You don't need to calculate yourself, it is already built in. I was just discussing the background, how the system or how the software is calculating. what is the logic behind that line, how these lines are derived. So you don't need to consider this. Like, and for 12 and 26, I was about to come on this thing. So this 12 and 26, okay, like the name suggests here, MACD 12, 26, close 9. So this red line, this MACD line, blue line, this is I mentioned that this is actually the moving average of 2 points in time. For the last 2 points, we calculate the difference of the moving averages of the 2 points in time. So one is 26 and the other one is 26, the other one is 12. So we have considered the moving average of the last 12 and the moving average of the 26th period and the moving average of the 12th period. So we have calculated the difference between these two averages and have plotted it here over a period of time. So when we calculate the difference, we will get a number. So this number is here. You put a dot here. Then we another dot, and then we join all these dots, so we get a line. So this difference of the last 26-day period and the 12-day period is plotted over a period of time, and then we join all these points, we'll get a line. So that line is called a MACD line for the last two moving averages of the closing prices. And this number 9 is actually the 9-day period as depicted by your red line. So the red line is actually the moving average of this blue line, and the period considered is 9. You can change this also in the format, but it's better to use stick with the same, because it is mostly used. And how this is done, this is the last 26-day 12-day period average, difference between those two, and the red line is actually the average of the 9-day period based on the blue line. So that's how we calculate this, but this is built in the system. If you want to change this, you can change. You can go here in the format and you can change the length, the fast length period and the short length period and the signal length period, but it's better to stick with the same, because these are more commonly and widely used. But you have a choice. If you want to change it, you can. Okay, I hope that answers your question.